Todd, recently I read that Brazil is manipulating its currency. And I read that also America sometimes manipulates its currency. Why are countries manipulating their currencies?
Well, Tisha, America and Brazil aren't the only ones. China is a very big manipulator of their currency as well, and that's affected our trade imbalance and other issues economically for America. Countries can, for instance, with China, keep their currency very cheap, and it makes their imports, their goods that they bring into the United States, much more affordable to Americans. And you can see cheap Chinese goods throughout the country. And so people think that they are keeping it artificially cheap by going in and selling their own currency to keep that value down. And that's manipulation. It should be a free market that changes the value of the currency and that sets the value of the currency. It should be a market, like any other market, like the value of bread in the supermarket.
So what is like a free market? What does that do?
Well, it is a place where people can go and buy and sell things very simply. And you see it in a store, you see it in whether it be food, whether it be a restaurant, whether it be anything. And currencies are the same way. It's a market out there, and people can buy and sell different currencies, whether it be the dollar, the Chinese yuan, the British pound, the euro, etc.
Okay, so what are the currencies tied to why people would buy it? I mean, is it tied to gold? Is it tied to...
Well, historically, countries in the past have tied their currencies to something of value. Whether gold has been the main store of value or currency, if you will, globally throughout history. You had thousands of years ago, people would use gold and silver as a store of value to trade back and forth and to pay for things. And what has happened over time, we have come off that gold standard. And so now our currency will fluctuate and is allowed to be manipulated by governments because it's not tied to anything of value. And some people say we should go back either to the gold standard or to tie it to some other store of value, whether it be commodities, oil, wheat, energy. So that's what a market is.
So, you know, lately have you noticed that the price of beef went up? Does that have anything to do with the US dollar, or is it just...
It is, because historically people have viewed the US dollar as a risk-free investment. So if they wanted to put money somewhere where they didn't want to lose it, they would buy US dollars. But that's changed because we've lost our AAA credit rating. So therefore, people are not as sure that they want dollars, so they're buying oil, which they think maybe is better. And that's one of the reasons you see gas prices rising.
So what is a AAA rating, and why do we care if we've lost it?
It's the best credit rating you can have. Like if you go for a mortgage or a car loan, and they look at your credit, right? And they check your credit rating. And if you have great credit, you get a very low interest rate on the loan. But it's the same way in the financial markets. The U.S. government has a credit rating, and it used to be AAA, which is the best. Now it's been knocked down a grade to AA by some raters and rating agencies, and that has impacted the value of our currency as well.
So why did we go down a notch? I mean, aren't we Americans? Why are we not getting AAA?
Because we have $16 trillion in debt. I don't think anybody can understand how much money that is. And we're adding almost $2 trillion a year to that debt for the next 10 or 20 years.
So who's adding this? The government is adding this
we are borrowing money to pay our bills. We're borrowing money from China, from Russia, from all over the world to pay our budget in the United States, to pay for our budget. And eventually you become less of a good creditor, right? I mean, people don't want to lend you any more money, or they want a lot more money to lend you money. Our interest rates now are so low that it's allowing this to go on. But if they spike up, then that could impact your mortgage, as I said, or your car loan, your kids' education loans. That if you're paying 2% now, it could go to 20%.
So do you think that borrowing $2 trillion a year, is that sustainable?
It's not sustainable. No, we're at the point now where the markets are starting to react to that, and that's why we've seen our credit rating come down a notch. And if you look at what's going on in Greece, that's a situation where it became unsustainable. So now they're having to cut across the board jobs, budgets, everything to get their finances back under control, and there's a lot of pain in the people of those countries. They're suffering.
So you think that America will be like Greece if we keep borrowing $2 trillion?
Very much so. Eventually, it's just a matter of time, whether it'll be a couple years from now or 10 years from now.
So how is the government supposed to pay for our food stamps and unemployment and retirement if we can't borrow the money?
The best way, well, they won't be able to. That's what's happening in Greece. So the best way to fix this is to reduce the amount we borrow by growing the economy, by creating jobs, not by the government creating jobs, but by the private sector, by creating companies that hire people and put money back into the economy, and that will create more tax revenue, which will give the government more money. So
you mentioned earlier that the euro is not as strong. Why don't you think the euro is as strong of a currency anymore?
Because we've had this same, what's happening in Europe is exactly what I'm talking about. Governments there for decades have borrowed too much money and promised their citizens everything.
Yes.
And they can't pay for it anymore. So you're seeing a bunch of different countries in Europe having trouble paying their debts and having the markets charge them a lot more money to borrow money. And some countries like Greece can't even come to the market and borrow money anymore. So they're having to go to other countries in Europe or to central banks and getting them to loan them money, which they couldn't get on the private market.
So what is inflation and what is like supply and demand, and how do you hedge yourself against inflation if the dollar keeps?
Well, inflation is what happens, the currency is just like any other commodity. It's just like oil, it's just like bread. If you have it everywhere, it's not worth very much.
Yes.
And what has happened is the Fed is printing so much money that there's so many dollars out there that eventually it just won't be worth anything, and that will cause prices to rise because it'll take more and more of those dollars because they're not worth as much to buy food or to buy gas or to buy electricity or whatever. So it will snowball, if you will.
And I read that what does interest rate has to do with the U.S. dollar? Why is that?
Well,
so
as your credit rating goes down, and people are scared that you're going to pay back the money, they will ask for a higher interest rate. So instead of us paying 3% to China a year, it could be 10, 15, or 20%, and that we can't afford that on 16, 20, 30 trillion dollars. So we will just not have the money to pay it, and we'll have to default like Greece has.
So what's your suggestion to Americans? What is the suggestion?
We have to control our spending, and that is going to be painful. But if we don't do it now, it will be much painful later.
So you mean the entitlement stuff needs to go away or to reduce it?
We can't have we can't have the government taking care of everybody. The private sector needs to take care of people, and we need to grow the economy and have more businesses, more jobs that can pay taxes. That will give the money to the government, buy their taxes, and then we will have money to pay our debts. Obviously, there has to be a safety net, people have to be taken care of, but the government can't take care of everything. It just doesn't have the money. So over time, we have to slowly make some changes in our budget to address those problems.
I know you don't have a crystal ball, but where do you see the U.S. dollar going?
Well, in the short run, it could actually do okay because as interest rates spike up, people will want to buy it to get the investment. But over time, our economy will suffer and it could drastically reduce its value over time in the long run. But so it's an issue. It's not just the economy, it's also our national defense. And that's what I wrote the book about, is that as people see us weaker economically, they may be more willing to take chances and confront us militarily or not be worried about our reaction to anything worldwide. And I think you see that in Iran right now. It's said that if you don't know history, you're doomed to repeat it. And I think that's exactly what's happening right now. Is we've forgotten the lessons that if we're weak, people will try to take advantage of us. So.
And is China already like trading the dollar as well as China? Have they entered?
Well, China owns right now about $3 trillion of our debt. They're our banker. Every year we go to them and say, China, we need to borrow another $1 trillion.
Yes.
And if you think about that, we become beholden to them over time. If they own our debt, and we have to go then next year and next year and next year to borrow money, and they're going to have more and more and more of our dollars. And so if you think about that, they could one day come and say, we're not going to let you borrow any more money. Then our economy would suffer drastically. People wouldn't have jobs, they wouldn't have any entitlements because the government wouldn't be able to borrow. And that becomes a national security risk as well.